What if I told you that the place you trust most with your money, your bank, has been keeping secrets from you? Secrets that could change your financial life forever. They're not just holding your cash, they're playing a game, and most of us don't even know the rules. Stick with me, because by the end of this video, you'll not only learn the rules but also how to win. Ever wonder how banks make so much money? It's not just from fees. The real magic happens with something called fractional reserve banking. When you deposit $1,000, the bank doesn't just lock it in a vault. Legally, they only have to keep a small fraction, say $100, on hand. The other $900 they lend it out to someone else, charging them interest. Now, here's where it gets crazy. That person who borrowed the $900 spends it, and it gets deposited into another bank. That second bank then keeps a fraction, say $90, and lends out the remaining $810. This cycle repeats over and over. Your initial $1,000 has now created thousands more in the economy, all while generating interest and profits for the banks. They are literally creating money out of thin air, using your deposit as the starting point. So, while your savings account earns you a measly fraction of a percent in interest, the bank is using your money to earn 5, 10, even 20 times that amount through loans, credit cards, and investments. The tiny interest rate they give you is just enough to keep you happy, while they get rich off your capital. It's the biggest financial secret hiding in plain sight. Let's talk about savings accounts. Banks love to market them as the safest place for your money, and while they are secure, they're often a terrible place to grow your wealth. The interest rates on most savings accounts are so low that they don't even keep up with inflation. Inflation is the rate at which the cost of goods and services increases, and your money loses purchasing power. If your savings account pays you 1% interest, but inflation is at 3%, you are effectively losing 2% of your money's value every single year without even touching it. Your money is slowly bleeding out, and the bank isn't telling you this. They want your cash sitting in their accounts, providing them with the capital to lend out and make real returns. They sell you security, but what you're really buying is a front-row seat to your money's slow decline. So, where should you put your money? Banks would prefer you didn't know about high-yield savings accounts offered by online-only banks. These banks have lower overhead costs, no physical branches, fewer tellers, so they can afford to pass those savings on to you in the form of much higher interest rates. We're talking rates that can be 10 or even 20 times higher than what you'd get at a traditional big-knee bank. Switching can feel like a hassle, and that's exactly what big banks count on. They rely on your inertia. But taking an hour to open a high-yield account could earn you hundreds or even thousands of extra dollars over time for doing absolutely nothing. It's the simplest way to start making your money work for you, instead of just for your bank. Now for the big one, debt. Banks have mastered the art of selling debt as a lifestyle. Credit cards with tempting rewards, car loans with seemingly low monthly payments, mortgages that stretch for 30 years. They make it easy and attractive to borrow money. Why? Because your debt is their asset. It's a guaranteed income stream for them, for years or even decades. Think about a 30-year mortgage. You might borrow $300,000, but by the time you've made all the payments, you could have paid back over $600,000 in total. The bank just doubled its money, all thanks to interest. They've framed debt as a normal, necessary part of life, but it's really a golden cage that keeps you tied to them. The secret they don't want you to know is that you can break free much faster. Making even one extra mortgage payment a year can shave years off your loan and save you tens of thousands of dollars in interest. Paying more than the minimum on your credit card each month can cut your repayment time in half. They calculate minimum payments to keep you in debt for as long as possible. Don't play their game. Aggressively paying down high-interest debt is one of the best financial moves you can make. Let's discuss fees. Overdraft fees, monthly maintenance fees, ATM fees, transfer fees. It's a death by 1,000 cuts. A single $35 overdraft fee might not seem like much, but they add up. Banks collect billions of dollars in these fees every year. They are designed to penalize you for being human and making small mistakes. But here's the secret. Many of these fees are negotiable. If you have a good history with the bank, a simple phone call can often get a fee waived. Call them, be polite, and explain the situation. You'd be surprised how often they'll reverse the charge just to keep you as a customer. Furthermore, many banks now offer accounts with no monthly fees if you meet certain criteria, like maintaining a minimum balance or setting up direct deposit. They don't advertise this loudly, but the options are there if you look for them. Don't just accept fees as a cost of banking. Challenge them. Banks often have their own financial advisors, but it's crucial to understand their role. Are they working for you or for the bank? Many bank advisors are essentially salespeople. Their job is to sell you the bank's own financial products, like their specific mutual funds or annuities. These products often come with higher fees and may not be the best option for your personal situation. They might be pushed to meet sales quotas, which can create a conflict of interest. The advice you get might be better for the bank's bottom line than for yours. A true fiduciary, on the other hand, is legally obligated to act in your best interest. Before taking financial advice, always ask, are you a fiduciary? If they hesitate or say no, be very careful. Your financial future is too important to entrust to someone who isn't 100% on your side. So, what have we learned? Your bank uses your money to create more money for itself. Standard savings accounts often lose you money to inflation. Debt is a trap designed to maximize their profits. And fees are often negotiable. These aren't just interesting facts, they are calls to action. It's time to take control of your finances. Start by auditing your own banking. Are you in a low-interest savings account? Look into high-yield alternatives. Are you only paying the minimum on your credit cards? Create a plan to pay them off faster. Have you been hit with a fee? Pick up the phone and ask for it to be waived. Knowledge is power, but only when you act on it. Don't let the banks play their game with your hard-earned money. Start seeing your bank not as a safe storage unit, but as a business partner. And in any partnership, you need to understand the terms. Read the fine print. Ask questions. Don't be passive. Your financial education is the single greatest investment you will ever make. It pays dividends for a lifetime, and it's the one thing the banks can't take from you. The financial system is complex, but it's not impossible to understand. By learning these secrets, you've already taken the first step towards building real wealth and achieving financial freedom. Don't stop here. Keep learning, keep questioning, and keep growing. If this video opened your eyes and you want to learn more secrets to mastering your money, make sure to hit that subscribe button and ring the notification bell. We have so much more to share with you on this journey. Thank you for watching, and let's get smart with our money together.